Bitcoin and the altcoins fell sharply, and according to many analysts, the real crash is yet to come. Stay with us to find out what triggered the new collapse, when we will reach the bottom of the bear cycle, and how low Bitcoin can fall. We will also tell you which crypto project hackers drained millions of dollars from, and why Hyperliquid is among the few cryptocurrencies whose prices remain in the green. Despite the falling prices, let's start the week at full speed with lots of likes and comments from you, for which I thank you in advance. Now enjoy watching and listening. Bitcoin held above $80,000 for a while, but over the weekend it once again entered a mode of serious decline. At the time of this recording, the main cryptocurrency is trading at around $76,700, a 5% weekly drop and the lowest level since the beginning of the month. Ethereum reversed down to $2,100, and altcoins like P-Network, BitTensor, Dogecoin, Litecoin and many others lost 6 to 7% of their value in just the last 24 hours. Hyperliquid is up 6% and the best performing cryptocurrency among the top 100 team. We will explain what is happening there a bit later. The total market capitalization of the crypto sector fell to $2.6 trillion, and of course the crisis hit traders who had opened overly risky positions extremely hard. Data shows that in the last 24 hours, over 111,000 market participants were liquidated, with total liquidations reaching almost $700 million. Naturally, long positions dominate. The largest single liquidation happened on the BitGet exchange and is worth almost $30 million. And what changed the course of the market? Well, the most logical reason for what's happening seems to be the new dose of tension between the US and Iran. The American President Donald Trump was once again very active last night on Truth Social, and in one of his posts he wrote, "For Iran, the clock is ticking and they better act fast because otherwise there will be nothing left of them. Time is of the essence." Shortly after that, Trump made a collage in which he's in a spaceship pressing a red button while bombs explode behind him. One of them has the ominous mushroom cloud, the most recognizable visual element of the atomic bomb. Whether he's just scaring the world or something very serious is coming next, only God knows. In the end, these posts of his led not only to a price correction in the crypto market, but also to a crash in the financial markets as well as a significant increase in the price of oil. All bad things. Another factor that likely affected cryptocurrencies negatively, especially Bitcoin and Ethereum, is the ETF front. In the last few days, outflows from spot Bitcoin ETFs have drastically exceeded inflows. Translated into normal language, this means that investors are selling their shares in these funds, forcing the companies behind these products to sell real Bitcoin and Ethereum. After we found out what pushed the market down, let's see what comes next. According to the well-known analyst Merlijn The Trader, the situation could worsen significantly if the market repeats its historical patterns. He noted that the current chart structure strongly resembles Bitcoin's behavior in previous cycles, when after forming a macro top, a deep and prolonged correction followed. If this scenario repeats, the analyst warns that the next logical stop for BTC could be around $33,000, a zone that coincides with key historical support and accumulated liquidity from past years. He also points out another important factor that is often underestimated. The month of May is traditionally weak for Bitcoin in years when there are midterm elections in the US. Historical data shows that in such periods the market is under increased pressure due to political uncertainty, higher volatility, and lower risk appetite from institutional investors. This further reinforces the bearish scenario he is considering. In another of his forecasts, Merlijn claims that Bitcoin is literally repeating the 2021 playbook, and that we're right now at step 4 of the same model. Here is what this scenario looks like. Step 1, distribution, done. Step 2, small consolidation, done. Step 3, redistribution, done. Step 4, accumulation, upcoming. Step 5, reaccumulation, and step 6, bull run. According to this model, if Bitcoin falls below the 78,000 zone, step 4 cannot be avoided and the price would logically move toward the $45,000 to $59,000 range before moving to the next phase. If, however, 78,000 holds as support, step 4 may be skipped and the market may move directly to the next phase. Write in the comments what you expect. How low do you think Bitcoin can fall this year? While the market is shaking, the hackers decided to pour more fuel on the fire. This time the victim is THORCHAIN, one of the largest and oldest cross-chain protocols, which for years has been advertised as indestructible. Well, over the weekend it turned out it's not quite like that. Hackers managed to drain almost $11 million through a precisely planned exploit that literally paralyzed THORCHAIN's cross-chain infrastructure for 13 hours. The attack targeted the way the protocol processes transfers between different chains. The attackers found a way to submit fake requests that look completely valid to the system and thus managed to withdraw real assets without depositing anything in return. As soon as the team detected the anomaly, a protective mechanism automatically activated, stopping all operations when an attack is suspected. This prevented even greater damage, but despite that, the almost $11 million in losses is a fact. The protocol was put into safe mode while developers closed the vulnerability, synchronized validators, and checked for secondary breaches. More worryingly, according to initial data, the attack was a combination of automated scripts and manual control, suggesting that a well-organized group stands behind it rather than a random hacker. Part of the funds have already passed through mixers, making them almost impossible to trace. This incident once again shows how risky cross-chain bridges are. THORCHAIN is one of the most experienced players in the sector, with years of development and audits under its belt, yet it fell victim to an exploit. And finally, we end with one of the few positive news items in an otherwise bloody market. While almost all cryptocurrencies are sliding down, HYPERLIQUID did the exact opposite. It rose by about 6%, and the reason for this increase is more than clear. Tokenized access to the pre-IPO of SpaceX appeared on the HYPERLIQUID platform. This is a huge event because SpaceX is valued at over $200 billion. This naturally led to massive interest. Traders rushed to the platform, liquidity jumped, and along with it, demand for HYPE, the ecosystem's token, increased. HYPERLIQUID has long positioned itself as one of the most innovative on-chain derivatives exchange, but the appearance of SpaceX sent it into a completely different orbit. That's all for today, friends. Have a nice and successful day, and see you tomorrow.